Nitasha Shankar, Head of Research, Yes Securities. Natasha, just a month back, or not even a month back, 2 weeks back, if we would have heard everyone's market commentary, it was all rosy and there was nothing which was going to hit this market. But it did. And point is that no one knows the exact reason. People are talking about interest rates going higher in US, and that's the result of that. The markets are correcting. But that fact we knew, probably a couple of quarters back that interest rates are going to move higher. What has led to this correction, and how are you approaching? What is your suggestion to clients at Yes Securities?
So what we think that the correction was largely overdue on account of a bit of a stretch valuation, at least in the near to mid term. And it's definitely come as a welcome relief. We do think that the markets would remain volatile, ahead of 31st March, given the fact that a lot of investors may try to use that opportunity to book some profits, not really take out capital, but to book some profits in their long-term positions, just to try and make sure that they don't come under the purview of long-term capital gains tax. But having said that, if you're looking at the longer term trend, the markets, we do think that they would continue to trend upwards, and any kind of movement that you see in these kind of volatile times should at least actually be looked at as an opportunity to accumulate quality stocks, and that's what we are suggesting to our clients as well.
Will you tell your clients not to accumulate quality stocks? But jokes apart, as far as the long-term capital gains taxes that you just talked about, there's also been a fear about the impact it's going to have on mutual funds. So can you give us an idea of what you guys at Yes Securities are doing to maybe rejig portfolios, etc.?
So we think that if you're really looking at your portfolio from a perspective of tax, that's probably the most inefficient way to try and rebalance your portfolios. Equities was pretty much the only asset class in the country where there was no long-term capital gains tax applicable. If you're looking at any other asset class, there were always taxes which were applicable on it. So it's just an anomaly that has been corrected. Having said that, one needs to look at the long-term gains, and if your gains adjusted for the tax are still better as compared to the rest of the asset classes, then whether long-term capital gains does come into effect or not, it should really not persuade you or dissuade you from investing in equities as such. And what one needs to look at is what kind of a portfolio are you holding on to, and why are you holding on to it. If you're holding on to it from an investment perspective and nothing has changed as far as the fundamentals of the company is concerned, then why just rejig it just because there is a tax applicable on it?
In this kind of market, Natasha, investors and viewers always would like to, have a very specific advice. And I would come to you because I know you talk stocks specific as well. Give us, two large cap stocks which you feel have decent potential of generating returns, and at the same time doesn't have a very significant downside from current levels. And I think that's what, today most of the investors who have, time horizon not very long, but say probably 6 months to 1 year, would look forward to. And also some of the mid caps where you see the growth potential is quite high. So two large cap and two mid cap name for our viewers, please.
So if you're looking at risk-adjusted returns, I think two stocks which would come top of our mind, or which we have actually been talking to our clients about in the large cap space. One is, of course, Coal India. It's a monopoly on the coal side, and with the focus that the government has on trying to boost power, and also to make sure that the reliance on import of coal, starts coming down significantly. Coal India would definitely continue to benefit from it. Of course, every month there is a hit or a miss as far as the output is concerned, and that actually gives you a buying opportunity or a book a partial profit kind of an opportunity. But from a long-term perspective, Coal India would definitely be one of our top picks in the large cap space. The second one would be Reliance Industries. Their petchem business has continued to outperform, and that core business has continued to generate cash for them. New facilities are also coming online, which would provide that extra delta. And if they continue to monetize their investments on the geo side, they've reported a profit for the first time in this quarter. So if they continue to monetize on that, so that would lead to incremental returns on capital employed as well. So that would be another stock that we're quite positive on. Within the mid-cap space, post the correction that we've seen, I think one of the topics would be Mahanagar Gas, because the company enjoys a monopoly status as far as gas distribution is concerned in both Mumbai MMR region, and they have a license for Raigad as well, where they yet to start operations in a significant way. They get the benefit of the priority sector benefit as far as the raw material costs are concerned. High returns on equity, cash-rich company, continues to pay dividend. One of the topics we have within the mid-cap space, and one could also look at the retail space and look at the company Future Retail. The company has done a good job of trying to boost their store numbers. At the same time, they're trying to focus on in-house and domestic in-house brands, which would help to boost their margins as well. And the current acquisitions that they have made is another thing that would go on to further their growth. So we think that that's another company we could look at post the kind of corrections that we've seen in the recent past.
Right. So it's Coal India and Reliance Industry, energy space. Yes, securities seem to be bullish on when it comes to large cap. And Mahanagar Gas and Future Retail, these are few of the mid cap names which they are suggesting to buy into in this volatile market. Nitasha, thank you so much for joining us and throwing light on what's your view on market and how one should approach this market. Thank you for joining us.